Brian, thanks so much for joining us inside the Ice House. Welcome to the New York Stock Exchange.
Thanks for having me.
So on July 31st, 2014, Synchrony made its debut on the NYSE. A decade later, the company returned this summer to ring the closing bell. Celebrating a 10-year milestone since its IPO, let's begin by reflecting just on the journey leading up to the initial listing in 2014 and really the immediate aftermath of it. Just what are your recollections of the challenges faced leading up to the spinoff from GE, the preparations, of course, for the IPO, and then the excitement of listing day and all the success afterwards?
Yeah, well, I'll tell you, I remember that day like it was yesterday. And just walking in the building today, I was flooded with memories of that day and the culmination of all the work that went into it. You know, we're a regulated bank, so to do an IPO like that and separate from GE, we had to have approval from the regulators. That was a massive process. Getting the company rated, building out the public company infrastructure, building out our own technology infrastructure. You know, we were part of a much bigger company, and so we leveraged a lot of those processes, a lot of those platforms. It was just a massive effort. And I remember that day because we had just come off a 2-week roadshow selling the IPO to investors, and we were exhausted. We were a little stressed out.
Much sleep in the 2-week roadshow?
Not much sleep at all. You know, 2-3 cities a day, every day for 2 weeks. And, you know, great experience. But I remember waking up that morning. I woke up early. I couldn't sleep, 4 o'clock in the morning. And something happened in the market. I think it was something related to Argentinian debt. And the pre-market was down 300 or 400 points that day. And I was like, oh, we picked this day to do the IPO. Like, come on. And I remember initially thinking, well, I really want the stock to trade up. And I saw what the market was doing. I was like, man, I really want the stock to be flat. Flat would be a great answer. And I think that's where we ended up. But, you know, just being here today brings all of that back. And, you know, how proud we all were of the company that we had built. And, you know, really optimistic about what was ahead, about the future. And I'll never forget that day. It's probably the highlight of my career, you know, still looking back on it. And, you know, to be sitting here 10 years later is really special. It's really special. You know, I'm as proud of the company we've built today. I'm even more optimistic about the future as I think about the next 10 years. I think, you know, I was telling our team that was here, we had our senior leadership team here. I was telling them, I was like, look, we just had a great decade, but the next one's going to be even better. Going to be even better.
So day one, July 31st, 2014, we're now approximately 3,700 days after that day right now. 10-year anniversary, again, July 31st, 2024. You sort of just mentioned it in your last answer, but how would you describe your sense of pride and the enthusiasm and the excitement of reaching that 10-year milestone and you leading the company into it and then obviously into the future for the next 10, 15, 20 years?
Yeah, you know, I couldn't be more proud of the team and what we've accomplished, the business. We've seen really good growth. I think really good performance. We have partners that are happy. We've added a lot of new partners. We've renewed a lot of existing partners. And I just feel like the franchise is poised for that next chapter. I feel like, you know, when I took over in 2021, one of the things that we did was we reorganized the company. And this was a company that hadn't been reorganized in over a decade. So it was a big change, but we felt it was the right time and it would prepare us for the future. So, you know, we aligned our business units by industry. We created a growth organization. We created a product organization. And one of the things we were trying to do was get more nimble. You know, we're a big regulated institution, but we compete with fintechs. And they're fast and they're nimble and they get in a room and they decide and they go and they put things in market and they test and learn. And that's what we needed to create. So really starting in 2021 is when we built out a lot of those agile processes. We reorganized with the product and the customer experience teams, and it's really paid off. You know, when I look back, starting with the IPO, we grew receivables by $20 billion in our first 7 years after we reorganized. it only took us 2 years to grow 20 billion.
So you go from spinning off from GE to a now global company with thousands of employees. And you mentioned the team, you mentioned culture. Synchrony has one of the best, earning recognition as one of Fortune magazine's best companies to work for. What do you believe has been the key to achieving this great cultural success and having your employees really love to come to work every day and love to come to work at Synchrony?
Well, we've always had a very strong culture, and we've had a great culture, and we pride ourselves on that. The biggest thing that we've done, particularly through the pandemic, is really listen to our employees. And that sounds simple, but a lot of our best ideas in terms of how to support our employees' unique and special benefits, they come from our teams. And, during the pandemic, we did something we didn't ask us anything call. Myself, the leadership team, we would just stay on this call as long as there were questions. And that was really great because what we got to hear directly from our employees on what were they concerned about? What did they need in terms of support? What were they looking for from us? And that helped us develop wellness programs and different support infrastructure. But one of the things that they also said was, wow, this remote work is really working. Yeah. And, I even saw it myself. Like, I was surprised. I was wrong. If you said in March of 2020, we could get, 20,000 people home, fully operational, and the business would still be humming, I would have said you're crazy. But that's what we did. And as we got into this rhythm and we built new processes and we moved to more agile, stand-up kind of operating rhythms, the business was performing really well. And we started to listen to our employees, and they said, wow, this really helps me balance the demands of my personal life with work. And employees were happier. They felt better supported. And, I saw it myself. I have 2 young girls, 12 and 13. So they were 9 and 10 at the time. For the first years of their life, I wasn't around to get them on the bus in the morning. It was a good result if I could get home in time before they went to bed. I wasn't getting home for family dinners. And all of a sudden we're spending 24 hours together, which has its own set of challenges. That's not perfect either.
Trust me, I know that.
But so I got to feel it a little bit myself. And as we started to listen to employees, and employees, they're taking care of elderly parents or sick loved ones, and just how this helped them kind of manage through that time period, we said, we should make this permanent. And we did that in October of 2020, which was very early. Mm-hmm. We're still in the throes of the pandemic, but we knew we could operate the business successfully like that. And we haven't gone back on that. And I don't think we will, because if the business is performing and our customers are happy, our partners are happy, we're growing, we're meeting our deliverables, we're delivering projects and products on time and on budget, then I don't see a reason to change. And so I think that was, we took an already great culture, and then by just really focusing on listening to our employees and making sure that they felt supported, I think we're able to take it to a whole new level.
So Brian, on July 31st, again, the date of the 10-year anniversary since the IPO, you penned a letter titled "A Decade of Partnership Celebrating Synchrony's People, Growth, and Impact." And in it, and I'm going to quote you here, you wrote, quote, "We know creating a world-class culture doesn't happen overnight. It takes patience, it takes intentionality, it takes investment, and it takes a commitment to partnering with people." So while it's clear Synchrony has achieved a culture that many others aspire for, do you believe that the words perfect culture exist, or is it something that's constantly needing to be worked on, something that's constantly needing to be changed and evolving, and, asking those employees on a regular basis, what can we do for you?
Yeah, it's definitely a living, breathing thing, and it is constantly evolving. You never get to perfection, right? We're not perfect. We're far from it. But I'll tell you, what you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too.
Yeah.
And, that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it.
Yeah.
But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well.
Yeah.
We've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances.
So I want to talk about you, and you're a Michigan native, a bachelor's degree in engineering from Michigan State. How does one go from graduation day as an aspiring engineer to GE's financial management program to a long career with the company as well? What sort of pushed the move away from, that at one time engineering aspiration?
Well, I'll tell you, I didn't select engineering with a whole lot of forethought, if I'm honest. In high school, I was good at math and science. And so engineering felt like a natural fit, but as I got through college, I got a better sense for what the day in, day out would be for an engineer. And I said, I'm not sure this is right for me. So I took, in my senior year, I took a whole bunch of business courses and finance, and I said, okay, I'm kind of drawn to this. I like the idea of charting a company's strategy and seeing the whole operation, not just a piece of it. And so when I was interviewing for jobs after college, a management development program was really what I was looking for. Because I didn't know exactly what I wanted to do. I was self-aware enough to know that I didn't know a lot.
Yeah.
And this program was great. It was 4 6-month rotations where I got to see different parts of the business. And I got to kind of feel out a little bit about what interested me, but also where did my skills kind of align. And that was great. And then I did, another series of rotational programs, management development programs, where, again, I was moving every 6 months. A big international component to that in Europe and Asia. I got to see different business units. I mean, this is back when GE had NBC.
Yeah.
They had plastics, aviation, healthcare, energy, transportation.
So there was a ton of diversity for you to see.
Ton of diversity. Yeah. And, I ended up cycling through a lot of those businesses, but I landed in financial services. And I did a short-term role in financial services, and I was really drawn to it. I can't tell you exactly what it was, but I was very drawn to it, and that's where I ended up spending the rest of my career. And I moved around a little bit within GE Capital at the time, commercial finance, commercial real estate. But, the consumer finance business was really interesting to me. It just felt different strategies. I loved being close to the consumer and the experience and how they're using our products. And so that's where I ended up.
So we just spoke to how Synchrony's sort of adapted since the pandemic, going and doubling down on that flexible work environment, that work from home. You just touching now on all the various management trainings you've been through. You've run divisions. You've obviously run companies, running Synchrony now. How have you seen the executive, the CEO, the leader adapt over the course of your career, not just from 2020 on, going through the pandemic and now out of the pandemic, but over the course of, your career, both at GE and now at Synchrony? How have executives and the CEO level adapted to all the changes?
Yeah, it's a great question. I think if I go back, it seems like, when I was earlier in my career, let's go back 10 years, everything was very methodical and felt very slow compared to how we're operating today. So I remember putting together a strategic plan, which took a couple months, and then you would revisit it a year later. You'd put together your operating plan or your budget for that year, and you'd revisit it, once a quarter and see how you're doing. It just, looking back on it, it felt very slow. And I think the biggest change for me is just how dynamic the CEO and the leadership roles in companies have had to be, not just because of the pandemic, but because things are changing so rapidly. And, instead of building a plan and then kind of set it and forget it for the year, you're in there every week looking at what's changing in the external environment, what's changing with our partners and our customers, consumer dynamics are changing every day, how they want to use financing, how they want to pay for things. And it just requires a leadership team just to be a lot more responsive, a lot more nimble, a lot more agile. And so, over the past 5 years, we've overhauled all of our internal processes. We used to have, you'd have like a weekly staff meeting. Now we meet 3 times a week, stand up, go around the horn, 30 minutes, everybody's informed, we make some decisions and we go. It's just a totally different operating model because, things are coming at you from all angles and it just feels it's such a dynamic environment. You have to match that with being very nimble.
So let's get into Synchrony. Works with iconic brands like Lowe's, Sam's Clubs, Dick's, Verizon, among many others, as well as local and small businesses that, build America's economy. How do you and your team tailor the individual products and services to make sure that Synchrony helps both those large brands that I mentioned before, as well as the mom and pop shops, as well as those that really form the backbone of America?
Yeah, it's not all that different, actually, than how I talked about supporting our employees. You have to listen. You have to really understand what they're trying to achieve. You have to understand their strategy and then figure out how we can support it, how we can complement it with our financing products. The big partners, those tend to be very customized solutions. We're highly integrated at their point of sale. We're highly integrated in their mobile app, online. We're everywhere they're communicating with their customers and people are purchasing. That's a different model than what we would use for mom and pop electronics store. Where it's a little bit more. Here are the financing products. Here's how to offer them. We do some training, but I'll tell you, it's really important to listen to that cohort because their needs and the pressure that they're under is very different.
Yeah,
and that's where I think we add a lot of value. And we add a lot of value to those partners, even outside of the credit program. Like we can actually help them on other topics, HR, finance, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. So we have a health and wellness platform. We have a home and auto platform, right? Because a lot of what they were asking us for was common.
Yeah.
And so one of the things we did is we launched the product organization was, now we create products for the enterprise. Build it once, deploy it everywhere. And that's made us much more efficient, but we're also getting, speed to market times that are, a fraction of what they used to be. And so I think, you really have to understand the dynamics in the industry, what your partner's trying to do, and then being really creative about how you can support it.
And you mentioned listening to the mom and pops, listening to that cohort of small businesses that, as I said, are America's backbone, really help build America's economy. And Synchrony is out there impacting those communities, both obviously working with the local and small businesses, but doing philanthropic work, doing charitable work. Stamford, Connecticut Mayor Caroline Simmons recently announced a $100,000 grant from Synchrony to the Stamford Parks Community Partnership. What do you see as Synchrony's role in just fostering brighter, more resilient communities, and how do initiatives like this one with Stamford align with the company's broader corporate values?
Yeah, I mean, it is a huge part of our culture. We love giving back to the communities in which we operate. Our employees are passionate about it. I think in the last 10 years, we've logged 120,000 volunteer hours across the company. And I'll tell you, our employees are passionate about it. We give people paid time off to do it. We love it when they support, the charities that we're very involved in, but also ones that they're really passionate about. And so it's always been a big part of who we are. And I think, we've accelerated some of those investments. One of the exciting things we did around the 10-year anniversary was we gave 100 employees $10,000 each to invest in the charity of their choice. And I was flooded with emails on just how meaningful that was to give them that money to support charities that were personal to them. They might not have been, they might not have aligned perfectly with our corporate philanthropy, but they were important to them personally. And it was just, I think, a real testament to how committed we are to giving back to the communities we operate in.
And one that I know aligns with your personal beliefs and personal philanthropy, the Doubles Dive, annual global polar plunge event that raises money for various organizations. Now, full disclosure, I've done polar plunges myself. That water, Brian, in the winter, in whatever ocean you decide to do it in, it hits different. Let's be real. It hits different. Where did this idea spawn from? Where did it sprout from? Why a polar plunge, and why has it, or how have you been able to grow it since that initial inception in 2015 to now what it's become, almost 10 years later?
Well, it's interesting. So the first one was actually in 2014. We don't really count it as part of it because I did it by myself.
Okay.
So
that's tough. I'll say, to do it yourself. It's always good to have a buddy next to you.
I had plenty of spectators.
Okay.
I was the only one that went in the water. I was the only one crazy enough. But I remember reading an article a couple days before New Year's about, just creative ways to bring yourself luck in the new year. And one of them was a polar plunge. I had never done one. So I started, I was talking a good game with my wife, like, I should do this. I should do this. And I said, if there was ever a year where we needed some good luck, some good fortune, it was the year of the IPO. So we got a lot of things that are going to come together this year that need to come together for this to be successful. And, I'm willing to sacrifice myself to get that done. So we went to the beach. I did it. Fast forward to July, we had a successful IPO. The company was doing well. And at that point I said, oh man, I'm going to have to do this forever. Because I'm very superstitious. I'm very superstitious. So I said, if I don't keep it going, bad things could happen. I was like, okay. So at that point, I was anchored in it probably, I don't know, for the rest of my life. We'll see. But it was really heartwarming to see the momentum that built as I started to describe that story. And, the next year, I think we had 25 employees that came out, then 50, then 100, then 150. And that's just in Connecticut. Yeah. Then we started doing it across all of our hubs. And to your point, Lake Michigan is a lot different than doing it in Florida.
I did mine in Coney Island.
Okay, that's real. That's very cold. Very cold.
You're right. No, Lake Michigan definitely hits a little bit different than if you were to go down south and do it in Florida. I would think actually hits a lot different when you really think.
You only get half credit if you're doing it in 65-degree water.
Yeah, when you think of the temperature difference and then obviously the water temperature difference. But it is, I will say, it's the water that gets you right when you walk in, but it's getting out of the water that really sort of makes it colder than really anything you've ever felt before, because you get the wind, there could be snow on the ground, obviously the water's cold itself, and then you have to rush to get a towel around you because otherwise you're gonna freeze as you're sitting there soaked in water. So it's definitely different depending on where you do it, but I think no matter where you do it, whether it be in Florida or Lake Michigan, the point of doing it remains the same.
Well, Minneapolis was probably the toughest one, where they actually have to cut a hole in the ice.
Oh my God.
And then you run through, and that one I still think about.
Yeah, I couldn't imagine doing that. I give those in Minneapolis who did it a lot of credit. Again, I did mine in Coney Island, which definitely was cold, but to have to cut a hole in the ice or a block in the ice to just be able to do the polar plunge. I give them a lot of credit, those who participated in Minneapolis. So shortly after you began as president and CEO, Synchrony launched an initiative to advance education equality called Education as an Equalizer. How do you see the role of corporate responsibility in general evolving in the context of education and workforce development? How has this initiative just helped empower students and build a stronger future, both in Stanford as well as around the globe?
Yeah, it's all part of that giving back to the communities. And, we've been very focused on communities that are frankly underserved and looking at, what else can we do in addition to just, donating money? How can we actually help people lift themselves up, build the skills that they need to compete for jobs? We launched a skills center in Stamford, Connecticut, our headquarters. It's been very successful because we were trying to figure out a way to do more. It's easy to write a check.
Yeah.
And we'll continue to do that. That's an important part of the strategy. But we said, look, we have people, employees who want to donate their time to this outside of work. They want to coach and mentor and teach. And we have a facility that we can leverage. And it's been really powerful. And it's been great to see our employees give a lot of themselves to this cause and really help train, help develop skills, for the underserved community.
So to go back to employee well-being and listening to your employees during the pandemic, those, ask any question calls, you're constantly asking, I'm sure in your mind, obviously asking your employees, how can we make Synchrony a better place to work? You talked about it, that there is no such thing as a perfect culture. It's an ever living thing, an ever evolving thing. The annual employee survey that a lot of companies set out, it's something that's common. It's not really unique to any one company. It gets sent out usually once or twice or 3 times a year. Employees choose whether to or whether to not answer. And then obviously those companies make changes to differing degrees, of course. Some make drastic changes, some only make slight changes. But outside of those employee surveys, you mentioned, again, obviously those Ask Me Anything calls. What are other ways that you're actively soliciting feedback from your employees and making sure that, those lower level workers, those, sort of on the front lines, I guess you could say, are having their opinions heard and that they're seeing those opinions then put into action by you and your leadership team?
Yeah. And, I should start by saying for our surveys, we leverage Great Places to Work. It's a phenomenal organization. We were lucky enough to make it into the top 5 this year. We're incredibly proud of that. I would tell you the most important part of that survey and that process is the write-in comments. Mm-hmm. So everybody scores all the questions, but what they actually write in and tell you is by far the most impactful. So, and I read all those comments. Mm-hmm. I go through them. We sort them by category. We look at them. We discuss them as a team. We do that by business unit. We do it by function. We do it by geography, which is important now that some of our hubs are more remote than others. And how are they feeling and what do they need that's different than what our employees are feeling maybe in Stamford, Connecticut, where they have an office to come to? Those are just fantastic insights. And we take all of that data and we look at it, we try to make it actionable, and then we complement it with regular roundtables. So I get out to our hubs and I meet with groups at all levels in the company, and we really just ask them what could be better, what's not working, be critical, be honest. And our employees they're very forthcoming. I always walk out of those with a long list of things that we have to go work on. But the part that you said is the most important, which is what did you do with that? Yeah. Right? How did you, what did you fix based on what I told you? And look, you can't fix everything. You try and get at, the items that are consistent themes across the company and focus on those first. And, we have an annual process to do that when we get the survey. But then we do it continuously throughout the year. We call them pulse surveys, which is just, we got 5 questions we want to ask you just to see how this is going and how it's impacting you and how you're feeling. And we'll push those out. It's kind of quick real-time data. You get that back from the employee base and you analyze it and you move, because it can't be an annual event. I think back to the earlier discussion, the environment is so dynamic. It's rapidly changing. How our employees feel about the world and the company, themselves, their families is changing all the time. And so getting that like quick market intelligence on how our employees waking up today, how they feel and what do they need is super important.
So that's how you hear feedback from an employee, shifting it to a customer perspective, specifically regarding innovation. Innovation happens when customer wants and needs evolve and they progress. How do you engage the customer base? We talked earlier about listening to those mom and pop shops and hearing the feedback from them and what they need, but how do you really engage the customer base to identify a problem and then go about devising a solution, devising a new product, devising a new service to ultimately address that problem that they're having?
Yeah, so we are for the big partner programs, we're highly integrated. Our teams, they sit together, they meet on a regular basis, and then what I do is I will try and go out and meet at the very senior levels, and I really just ask them one question, which is what could we be doing better, and they'll tell me. It's a very honest, we have a very honest dialogue about it. I don't come in and say, isn't everything great? Yeah. Right. Because that's not that helpful. Like I think we have great partnerships, great relationships, but I want to know what can we be doing better. So that's a whole listening campaign with our partners. And then with the end customers, we do NPS and look at, how they think about our products, ease of use, the customer experience. The customer experience has never been more important than it is right now. There is very little friction costs to moving to another product. It's relatively easy to do. So you need to make sure that the customer is having a good experience. And for us, that means it was easy to apply for credit. It was easy to make that first purchase, easy to pay their bill. If they have a question, it was easy to resolve. And we look at that entire life cycle of the consumer to make sure that we're making it as seamless and as frictionless as possible. And so, our business is a little more complicated because we've got two sets of customers. We have our big partners that are customers. We have our small to mid-sized businesses that are our partners. And then we have their end customers. And that whole value chain needs to work and feel like they're getting real value from the services and the products that we provide.
So I want to get into recent investments made by Synchrony. And in March of this past year, Synchrony completed the acquisition of Ally Lending, the point-of-sale financing business for Ally Financial. It's NYC ticker symbol ALLY. This acquisition enhances Synchrony's reach and scale in home improvement and health and wellness financing. Just how does this deal align with Synchrony's short and long-term strategy, and also obviously end up providing value to all the stakeholders involved, investors, shareholders, customers, et cetera?
Yeah, we're really excited about the acquisition of Ally Lending. I'll tell you, it's a business that we had looked at from afar. I got to know the CEO at the time, JB, pretty well. And, that business for Ally was always kind of subscale. It wasn't the core of what they did. And, I had asked them a couple times if they'd have any interest in selling it. And finally, he called me and said, yeah, okay, why don't we talk and see if we could get something done? Because that business, while subscale for Ally, is exactly what we do. It was a perfect fit. We're in health and wellness already. We're in home and auto. They had some different product capabilities that were attractive for us. And but when we looked at it, there were big synergies. On the revenue side, we thought we could grow this business. We can leverage our existing merchant and provider base to grow it. And so it was just a perfect strategic fit. And, frankly, I wish I could find more of those out there. It was one of those like, hey, this is a no-brainer. We should go do this.
And what's your process when determining the right time and the right company for M&A? I'm sure there are tons of prospects that you see, that you look at, and obviously you can't acquire them all. You're not going to acquire them all. But what's your process in determining the right ones to acquire and when the right time is to make a deal? Yeah,
we have a very active M&A screen that we're looking at constantly. We know, the types of companies that we would like to acquire. And they're typically smaller companies where we can leverage our scale to grow them. Yeah. And those are the types of deals that we like to do. Those are the types of deals that we've done. But you can't put opportunity on a calendar. Like you can't say we're going to go buy this company then. There's so many different variables. What's the bid ask on valuation? Yeah. When are they ready to sell? When are we ready to buy? What kind of economic cycle are we in? Can we get a good handle on how the business is actually performing or will perform through a cycle? There's a lot of variables, but we do a very rigorous process where we're constantly looking at companies out there and determining, who we'd like to acquire. We also have a big strategic ventures arm. Mm-hmm. That's making very small investments in startups and fintechs, and that's a pipeline for us as well. So, we'll get to know those companies. We're not making a big investment, so there's not a lot of risk. We're learning a lot along the way, but those companies, as we help them commercialize their products and capabilities, those are acquisition targets for us as well at some point.
And to Synchrony's great culture, I'm assuming that in this M&A decision making, one of the biggest focuses is on, does this company fit the culture?
Absolutely. Absolutely. I mean, that can make or break a deal. Yeah. I mean, it can look great on paper. The numbers can all work, but if it's not a cultural fit, it's not going to work. And so we spend time there. We try to get our team at all levels kind of heavily integrated with theirs during the due diligence process. So we're not just seeing, the senior executive team. We're seeing
from top to bottom
across many different functions and business units. So we get a good sense for that. And I'll tell you that, the Ally team and our team, that it was a cultural fit right out of the gate.
So in May of this past year, Synchrony, Virgin Red, and MasterCard announced a multi-year agreement for the new Virgin Red Rewards World Elite MasterCard credit card program. It's a mouthful, to say the least. The partnership will make Synchrony the exclusive U.S. issuer of a multi-category travel credit card program for Virgin Red. In what ways does this partnership help differentiate Synchrony within the industry, and how does aligning with Virgin Red and MasterCard benefit company goals and ultimately objectives?
Well, first, we're really excited about the partnership. I mean, it's an incredible brand, and we're just thrilled that they selected us to partner with them on the financing products. I'll tell you, it's unique in the sense that, there are plenty of airline cards out there. There are plenty of hotel cards out there. There are cruise line cards or financing products. Yeah. This combines all of that under one umbrella with an iconic brand. And so we couldn't be more excited about it. We're looking forward to launching it and growing it. And any program like this that, we would consider groundbreaking. Mm-hmm. PayPal's a good example. Then we launched the Venmo card, and on Venmo, we had the technology to optimize your rewards. Mm-hmm. So it just automatically put the customer in the highest reward category, and you didn't have to go in and select everything. And that was, at the time, that was pretty groundbreaking. So we're always looking at ways to do that. We want to find something that's unique and exciting and different, because one, we learn a lot from that. It helps build our brand, but we can also take some of those learnings to other places in the portfolio.
So our guests inside the Ice House are constantly bringing up the impact of AI, right? Ever since really November of 2022 and this AI boom has happened, it's really been integrated into every business in some way, shape, or form. It could just be as simple as day-to-day work from employees. It could be into products and services. Is Synchrony investing in AI? Are you implementing it into what you do on a daily basis? What role does it play within your company? Yeah,
no, it's a big opportunity for us. We are playing there today, whether it's through machine learning, data analytics, chatbots. That's been a big investment over the past 4 or 5 years. I think when it comes to Gen AI, which is the more recent, getting a lot of attention, we're investing in use cases there. We've got teams stacked against it. The thing I would say, though, we are a heavily regulated institution. Yeah. So we will likely not be a first adopter. We're happy to learn from others' mistakes, but it's very powerful. It's very powerful, whether you're looking at coding or writing press release or pulling reports, or it can make us so much more efficient. I would tell you most of our use cases at this point still require human intervention and human touch, right? So I think about it as it gives you a great first start, gives you a great first draft, but you still need a person at the end of the day to review it and tweak it and edit it, and that's that's fine. So we're super excited about the opportunity. We're just we're moving a little bit cautiously.
So, Brian, you're a veteran in the financial services industry, a career that spans multiple decades. As you've seen the sector evolve and now think 5, 10, 15 years down the road, what do you view as the most notable trends and even the most notable challenges that you see impacting the sector moving forward?
Yeah, I think specific to consumer finance, it really all does come back to that experience.
Yeah.
And that's where we've seen the biggest change over the past 5 years. That's where you're seeing the fintechs compete, is that just make it easy.
Yeah.
Just make it easy, whether it's Apple Pay, which more and more is just, it's so easy to use. I use it all the time. We want our cards loaded in Apple Pay, so they're getting used, and how you make it just really easy for the customer to apply for your product, to use it, to select it if it's in a wallet like Apple Pay. Because they want to maximize their savings, right? And there are different financing products that the customer will use depending on where they're shopping and the purchase that they're making. And, today I think we have the most comprehensive product suite in the industry. We do general purpose cards, private label, co-brand, buy now, pay later, secured card. We've got the banking products, high yield savings and deposits. And, depending on the partner and the customer, they want to choose from that menu of options depending on how they're shopping or how they're feeling that week and what they're buying. And I think we provide that. And I think that's the trend that you're just going to see continue to accelerate. And we are all over it. We have to continue to be all over it because, like I said, the friction costs of moving to something else or just not using it, right, are higher than they've ever been. So it all comes back to that experience and just making sure that every time the customer pulls out their digital wallet with a Synchrony card in it, they have a good experience.
So Synchrony, as I said at the start, celebrated 10 years as a listed company back on July 31st, 2024. Of course, that first day, July 31st, 2014. How are you plotting out Synchrony's future so that when we get to July 31st, 2034 and 2044, Synchrony has not only sustained its current success, but obviously grown with it and continue to evolve as a leader in the industry?
Yeah, look, I couldn't be more excited about the next 10 years. I think we're positioned really well for what's to come. I think we built out the right infrastructure, the right processes with a growth organization, combining operations and technology. We're delivering products faster to market than we ever have. I think that's going to be a trend that is just going to continue to accelerate. We have to be quick to market. We have to test and learn. We're leveraging MVPs, like all of those things that, we've done over the last 3 years. We're going to have to do all of that, but we're going to have to do it exponentially better. And at the end of the day, it comes back to listening to our partners, listening to our customers, and listening to our employees. That's how you run a successful business. If your employees are happy, you probably have happy partners and happy customers. At least that's what we believe. So far, that's proven true. I think it's going to be even more important as we chart our way through the next 10 years.
Well, Brian, I look forward to 10 years from now when we have you once again inside the Ice House to celebrate 20 years of Synchrony as a listed company here at the New York Stock Exchange. Thanks so much for joining us.
Thank you. I look forward to it.